Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
All right, let's get across the stock of the day. Hard to look past Washington H. Soul Patts after it reported a 28% drop in its full-year profit to just under $500 million. Now, that's reflecting lower profit contributions from Brickworks and New Hope within its strategic portfolio. Brickworks itself, let's call this a dual stock of the day, has posted a full-year stat loss of $119 million, saying it will be facing challenges in its building products business over the next year, and that it plans to temporarily close plants to control inventory. Okay, back to Soul Patts, and dividend payments jumped 9.2% to 95 cents per share, fully franked. We spoke with CEO Todd Barlow a short time ago and had a listen to what he had to say about the impact of Brickworks on the overall bottom line.
Yeah, the bigger impact that we saw in terms of our P&L last year came through from the devaluation of Brickworks property assets, more so than the construction cycle itself. And that was really just a reflection of higher interest rates, in the last couple of years. I would still think that industrial property is a really good asset class as against any other property asset class. We're seeing higher rents. It's very top quality portfolio of locations that Brickworks is invested in. But we saw expanding cap rates in industrial property, and that was what really impacted the P&L last year.
All right, and you can find that interview online, ausbiz.com.au, under our CEO section of the website. Soul Patts' share price is up by 0.7%. And I do think that we saw Brickworks' share price as well there. And it is, just checking in on it right now, up by close to 7%. So let's make sense of those two stocks. Daniel Ortiz from Stock Doctor, I might start with you. Are either of those companies a buy today for you?
Look, probably not in the buy. Maybe Brickworks, because it does have some more valuation support. So I guess when you look at these two businesses, you can't really look at the accounting profits due to the way that they function with the equity accounted methods, particularly for Soul Patts, because it has so many large strategic stakes. That's why you get that variability. And both companies, in my view, probably valued more on an asset basis. Brickworks has more valuation support from that point of view. And the fact that we've actually had a massive increase in the rental market for industrial, but it hasn't really flowed through to their property trust. They actually put a slide in their presentation today, which, is a bit shocking. Like their property trust is under rented by about 40%. It's going to take a long time for them to realize that, but I probably see more upside in their property book than I do with Soul Patts. And Soul Patts, unfortunately, has been the victim of its own success because it's had a few periods where it's done really well. The shares were trading well above what I would say, and the market probably should recognize as fair value, and hence it has been an underperformer for the last few years. But realistically, if you're in these stocks, you're probably in them for that ever increasing dividend, and they manage the dividends very well. They don't pay it out when they have record years of profits. They don't pay out a massive dividend. They might include a special one, which they've done through the New Hope coal profits, but they're slow, steady increases over time. So both are probably closer to a hold for me. But if I was interested in buying one at the moment, it would be Brickworks, and on that rate cut thematic, it probably has a better flow-on effect to their property book as well.
Okay, let's see if Mark Gardner from MPC Market agrees, because Washington H. Soul Patts would be in quite a few portfolios out there. Some call it the closest to Berkshire Hathaway that we have here in Australia.
Yeah, I mean, if you look at the numbers in isolation, you'd probably be pretty happy. If you look at the numbers compared to previous years, I think, just adding to Daniel's point, you might be a bit disappointed. I think it's a good set and forget scenario. We don't hold either, but I mean, Brickworks in our mind was a slightly better buy, and that's sort of been reflected in today's movements as well. So yeah, I think industrial property is a good place to be. There is high demand. And, I think I wouldn't be buying these today. There'd be a hold. I think if you've got these in your portfolio generally, they're good ones to buy on market panic because they've got such stable returns and such long track records. And they do hold really high quality companies, within the portfolios. So look, it'd be one that I'd be looking to, if there was any broader market panic, they're always really reliable ones to buy, to buy for the long term. But it's bordering on an ETF in a way. And yeah, so I don't think you're going to have any. I don't want to give a short-term view because I don't think anyone who'd be holding this would be playing this for the short term. So I just give it a hold. It's definitely on a sell on a long-term basis, and you'd be topping up, on any initial market weakness.
Got it. Thank you. All right, that is a 2 for the price of 1 stocks of the day, and a solid hold from both of my guests.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.